Welcome once again. Welcome. Today we're going to look straight into the difference between elements and components of financial statement. Now, when you talk about elements and components, this has been something that will be confusing so many people, maybe in practice or in exam situation. Identifying what is elements and identifying what is component has been a major issue in which we are going to handle here now. Now, in this video, I'm going to make it detailed, simple on how you are going to differentiate between elements of financial statement and component of financial statement. Now, in a nutshell, before I start explanation, elements are those things that cannot stand on their own. Just take it from me for the purpose of this lecture. They are those things that cannot stand on their own. Why? Components are those things that can stand on their own for the purpose of this lecture. For the purpose of this video, take that from me. Sorry. So, elements are those little things. Why? Components are those things that can stand on their own. Now, listen. Let's go into what is financial statement that we can explain detail. I'll give you example of elements of financial statement and also example of components of financial statement so that at the end you can easily differentiate both of them. Let's kickstart elements of financial statement. But first of all, let us define financial statement because it's very important. Financial statements are formal records of the financial activities and position of a business, person, or entity. They are used to provide financial information. They are used to provide financial information that can be useful for making what? Economic decision. Financial statement. Very important. There are financial activities and position of a business. It could be business, it could be a person, it could be an entity. But it must be a financial what? Activity that will make the end users, me and you, and other users of this financial record to do what? Make decision out of it. For example, you want to make decision from a financial statement. Maybe you want to invest in a company. You need to get their financial statement to look at the strengths of the company. Then you look at the financial position, income statement, and the cash flow. Let me not go detail because I'm stretching towards somewhere there now. So the basic things I want you to understand in this financial statement, there are financial activities of what? Of business or entity. They are used to provide financial information that can be useful for making economic decision making. Now, the primary element of financial statement includes this. This is the place we are coming to. Number one is asset. It's asset. Very, very important. Asset is one of the. Let me use another color so that we don't get ourselves confused. These are resources owned by companies that have economic value and are expected to provide future benefit. You know the definition of assets. They are resources owned by a company, right? That have what? Economic value are expected to provide future benefit. One of the elements is asset. Now, asset does not stand on its own in a financial statement. It doesn't. Now, asset will have what? Current asset and fixed assets. Now, the current asset will have cash receivable, and inventory. And the non-current asset will have the PPE. We all know this. But the aim is for us to know the elements of what financial statement. Asset is one of the elements of financial statement. Let's move to the second one. We have liability. Liability is another liability is what? Another element of financial statement. These are obligations of a company to pay debt or settle other financial commitments as a result of past transaction or event. Now, when you go to a shop to get something, you get that thing and you did not pay. You are liable to those people. You have to pay as a result of what you have collected from their hand. I'm just trying to explain this liability. But the core aim is for us to know that liability is what? Is an element of financial statement. It doesn't stand on its own in the financial statement. It's an element. We can go ahead to check accounts payable, short-term loans, or non-current assets, long-term debt, and other. But our aim is for us to know that liability is what? Element of financial statement. Let's check the next one. We have equity. Equity is another element of financial statement. Equity is another element of financial statements, also known as shareholders' equity or owner's equity. This represents the residual interest in the assets of the entity after deducting liability. It includes items such as common stock, within earning, and additional paid in capital. Now, equity, at the end of the year, the equity of the company determines the strength of the company. You see some of the equity will be in negative after you must have add or deduct retained earning. You see some in positive. Now, this equity is the capital. Shareholders' equity is also the element of financial statement. It doesn't stand on its own. It's an element in the financial statement. I just want you to understand those things that are elements in the financial statement. Now, let us check the next element. We've mentioned how many assets, liability, and equity. Another is revenue. Very, very important. Very, very important. Revenue. Revenue, these are the inflows of economic benefit during a period arising in the courses of the ordinary activities of an entity, such as sales of goods and services. Revenue is recognized when it is earned and realizable. But the aim here is for us to know the element of financial statement. But in as much as we are trying to know the element of financial statement, we should also know what this element stands for. That is why I'm explaining all this. Now, revenue. These are the inflow from economic benefits during a period arising in the course of an ordinary activity. You're selling. You are into business. Your firm is providing services. The services you provide, the money that inflow, the revenue that you made. That is what they are trying to say here. Now, revenue is an element of financial statement. It doesn't stand on its own in the financial statement. It's an element. It's under something. Right? It doesn't stand on its own. All these I have mentioned does not stand on their own. They are under something, which we are going to mention later. Next is expenses. It's one of the elements. Expenses is one of the elements. These are the outflow. Revenue are the inflow. These are the outflow or deflection of economic benefit. The way a period that arises in decrease in equity. But the aim is for us to know that expenses is an element of financial statements. It cannot stand on its own in the financial statement. It cannot. It is hiding under. Now, just take a look at those things that are hiding under things, under other things. They are what? The elements of finance. And not all things, but just picture these ones. Expenses is one of the elements of financial statement because it doesn't stand on its own in the financial statement. Now, let's check the next one. Gain. 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 Very, very, very crucial. These are the increase in equity from peripheral or incidental transaction of an entity and from all other transactions, events, and circumstances affecting the entity, except those that result from revenue or investment by owners. It is good you know what gains is all about. That is profit. But you should know that what is an element of financial statement. But this gain now, maybe in an exam situation, they ask you to mention the elements of financial statement. Even if you did not mention gain, you are still, and you mention other things, you are still on point. But mentioning gain, profit, also tells the examiner that you actually know what you are doing. That is what we are trying to get here. So gain is one of the elements. Gain doesn't stand on its own. It does not stand as a yes in the financial statement. No, it's hidden under something. They are under. Elements are under. Components are the babas. We will get there soon. Losses, the same thing. You know, after you must have prepared your income statement. It's either you made loss or you made what? That you made loss or you made what? Yes, you are right. Profit. Gain, losses. Profit, losses. Right? Net profit, net loss. Right? Losses, these are decrease in equity from peripheral or accidental transaction. They are descending, but it is good you know what they stand to in case they might ask. List the elements of financial statements and explain them so that you know what to say. But for the purpose of this lesson is for us to know what the elements of financial statement. The element. Now, let's go. Now, listen to the main financial statement where these elements are reported include now all these things, all these elements, they are reported somewhere. That is what I'm saying, that they are under something. Where all these elements are reported, it will take us to what we call components of financial statement. Components of financial statement. Now, all those elements, the revenue, the expenses, the assets, the liability that we mentioned earlier, they are reported under one of these components of financial statement. Now, let's take one of the components of finance. I told you they are stand on their own in the financial statement, right? Now, if you check finance, if you pick up an audited financial statement, an audited account of any company, these are the things you will see. Number one, you are going to see what? Statement of financial position, number one. Two, you are going to see your income statement that will specify whether you made profit or loss. Thirdly, you are going to see what? Your cash flow, statement of cash flow that specify the inflow and outflow of money. That was when we talk about income, revenue, and expenses. Inflow and outflow. After that, the next one is change in equity. Change in equity. Is the equity increasing? Is it reducing? That one will specify. Another one is note to account that specify all these. These are the things you see in an audited financial statement. Those things are what components of financial statement. They are standing on their own. On each page, they stand on pages on their own. And you can go ahead and get your 5 years financial statement summary. Right? Good. So let's explain the financial. Now, one, statement of financial what? Position. This statement of, sorry, let me highlight it so that you know where we are. It is essential we know that. Now, initially we call it balance sheet, but now it is called statement of financial position. I deliberately put it so that you will all know. This statement provides a snapshot of an entity financial position at a specific point in time, listing assets, liability, and equity. These are the elements we mentioned above. Now, I told you that they are under something. Now, these assets, liability, and equity are under what? Statement of financial position, which makes statement of financial position a component of financial statement, and asset, liability, an element of financial statement. I hope you are getting this. Yes, I want this to sink in. The next one is income statement. Income statement. Income statement. Sorry, let me just highlight it so that we'll have a better view. A better view. Income statement. Formerly, they call it what? Profit and loss. You understand? Statement. But now it is called income statement. This statement reports an entity financial performance over a specific accounting period, detailing revenue, expenses, gain, and loss, resulting in net income or net loss. You see what I said earlier? Now, revenue and expenses are hiding under income statement. While income statement is a component, and revenue, expenses, gain, and losses are what? Elements, because they are under income statement. I hope we are getting this. Yes, I just want us to know this, know it into so that whenever we hear components and elements, we can easily differentiate them without thinking twice. Is that right? Now, the next one is cash flow statement. Cash flow statement. Now, the cash flow statement, this statement shows the inflows and outflows of cash and cash equivalent over a period. It is divided into operating, investing, and financing activities. Now, cash flow is one of the components of financial statement. It monitors what comes into the organization, the inflow into the organization, and the outflow from the organization. What cash flow is interested in is just cash, money that came in, money that went out. And if you check your revenue, money came in by what? Revenue, and went out by expenses. So this cash flow is just there to get what comes in and what goes out. So revenue and expenses are still embedded here. But this cash flow is divided into operating activities, investing, and financing activities. Well, I'm going to do a video on cash flow. I think it's IS7 on cash flow so that we'll explain this in detail. But for the purpose of this lecture, cash flow statement is a component of financial statement. Let's go. Statement of change in equity. Statement of change in equity. Let's highlight it for clarity purpose. Yes. Change in this is a statement shows change in the equity section of the balance sheet over a period, including transaction with owners, net income or loss, and other comprehensive income. You see, some things are embedded here also. Those elements are just interwoven and intertwining. I don't speak English. Inter Miami. Pardon me for that. I just want to make sure that you understand what I'm saying. So elements are flexible in the components of financial statements. They are what? Flexible. They are always under. Statement of change in equity is what? A component of financial statement. The next one is note to account. Note to account. I didn't make any write-up on that because I want to explain it so that you will get it. Note to account. When you see in the income statement or in the balance sheet, pick any audited financial statement. You will see where the wrote number one, number two, revenue number one, this number two, equity number four, return earning number five, cash and cash equivalent six, just like that. When you go to the income statement, you see direct cost seven, revenue eight, the other expenses, other income with numbers there. Those are the notes. You will those numbers. If you want to check how the general what made up the revenue of the company, because you just see revenue number two, then you go to the note to the account and check it number two. You see what the source of revenue that the company has. Then you check the administrative expenses is giving you five. You go to the note to the account and see what actually made up this figure here. When you get to the note of the account, administrative expenses, you begin to see transport and traveling, medication, all sorts of expenses that have been incurred by the company. Note account helps you to break down any amount in the financial statement, give you detailed use of how that money emerged. I don't know if you are getting me. I don't know how I can explain this so you get, but I know you are getting. So note to account is an element. Sorry, it's a component. Sorry, note to account is a component of financial statement. Now let's look at this. These elements and components provide a comprehensive picture of an entity financial health and performance, essential for stakeholders such as investor, predictor, and management to make informed decisions. The elements and the component provide what? A comprehensive picture of an entity. One cannot work without the other. Without the element, you cannot get the component. And without the component, the elements will not be pronounced very well. So they are interwoven, they are interrelated, they work hand in hand to come up with a comprehensive picture of an entity financial health in which the investors, stakeholders, predictor, me and you can make decisions out of a particular financial statement. I hope we are getting that. So this is where we've come to the end of this lecture. But the key thing in this lecture is element and components. Let me just say something again. Elements are hiding under components. Elements are hiding under component. I'm just giving you a trick in which you can use to differentiate the two. Now, the components are standing on their own. Elements don't stand on their own in the financial statements. Components stand on their own, right? So just take that, and the two must work together to give you a comprehensive picture of an entity financial health and performance. So thank you very much. Thank you very much. God bless you. Thank you for listening, and do what to do what? Subscribe to our YouTube channel. Thank you. We'll be bringing more of this to you. Thank you very much, and God bless you.